Yep. That's me. That's what they call me. That's what my wife calls me.
Okay. Hello, everyone. Welcome back to the channel. I'm very honored to have the CEO of ZenGate and a familiar face in the Cardano and Ergo ecosystem, Daniel Friedman. Welcome back to the channel, Dan.
Thank you. Thanks. Good to be back. And I don't know if honored is maybe too strong a word, like not displeased, maybe. Not totally buggered to have him back. Maybe that's a little bit more I guess sustainable, expectations wise. Anyway, great to be back. Thanks, Anthony. It's good to be back on the show. What do we call these things now? Are they podcasts? Are they shows? I'm not up with the lingo. I'm getting too old to be on like the top of the lingo.
Well, this is the equivalent of AM radio back in the day. So however people consume the content, for now it's on YouTube. It probably will bleed out into other mediums, but maybe I'll have a transcript that I put on literally Medium as well. So it's content.
Yeah, so it's like somewhere between like what, NPR and classic music 24/7.
Yeah, try not to get into the politics of a lot of these places, but it's like fiber, a lot of foods contain them and you can consume it in many different ways. So welcome to Fiber AM. So right off the bat, I had the pleasure of interviewing Sam, which was amazing for part one of this interview. And at this point in time, you guys are very busy with ZenGate. You guys are traveling across the world, literally joining conferences, building relationships, particularly in Sri Lanka. And you just got back from Las Vegas and you actually live in Japan. So it's been hectic for you, and I appreciate your time. It's been, a lot of persistency to get you on, which I understand. So there's a huge problem with supply chains, and blockchain can essentially help resolve them if they're done properly, if it's done and implemented properly. So I want to preface the conversation so people kind of understand where we've been with supply chain information, what are the bottlenecks, where are the problems, and then how ZenGate and Palmyra, as one of those flagship products that you've already launched in Sri Lanka and other pilot countries as well coming up, how that can solve this issue. So considerable advancement in supply chain information sharing has taken place since the 90s, thanks to the use of ERP systems or enterprise resource planning. However, visibility remains a challenge in large supply chains involving complex transactions. For example, if we were to illustrate the limitations of the current world of financial ledger entries and ERP systems, along with the potential benefits of a world of blockchain, a hypothetical scenario to consider is if we were to think of a simple transaction involving a retailer that sources a product from a supplier and a bank that facilitates the working capital that supplier needs to fill the order. This transaction is kind of a trifecta of information flows, inventory, and financial flows. But it's important to note that a given flow does not result in financial ledger entries of all three parties involved equally. And state-of-the-art ERP systems or manual audits or inspections can't reliably connect the three flows of information. So that makes it hard to eliminate execution errors. It makes it hard to improve the decision-making and resolve supply chain conflicts and efficiencies. So a blockchain system is a great solution because it can eliminate the blind spots by enabling faster and more cost-efficient delivery of products, enhancing products' traceability, and improving coordination between partners, consumers, and also aiding access to financial backing and credit. The source of that is Harvard Business Review. So basically, first off, Dan, with that being said, I kind of worded this differently. Where do you find the balls to work on this new startup concept from the ground up? Why this multi-trillion-dollar problem in particular, out of all the available avenues out there that you could have focused on?
Well, so I guess I'm going to start kind of from the middle out on this, just actually, which is one of our business pillars, right? The middle out approach. So in this context, well, okay, so why ZenGate? ZenGate was basically created because I love Ergo, but we all know that Ergo just does not have commercial adoption. And it's not because there's not enough exchange listings. It's not because we don't have enough VCs. It's just because we haven't built enough products, which is fine. That's how an ecosystem evolves. You build. I was actually mentioning this in the AMA yesterday, and then it just reaches critical mass, and then it goes exponential, and then that becomes a paradigm, and then that reaches a critical mass and becomes even more exponential, right? And so we're at a crossroads right now. We have enough tooling. We do. We have a lot of really good tooling in the ecosystem. We can build a lot of really cool shit. The thing about it is that we have been building blockchain stuff for blockchain stuff. And like I said, I don't want to diminish the importance of tooling, but at some point you need to start using the tooling for something that is outside of our close-knit ecosystem, where basically everybody knows about blockchain, everybody knows about Ergo, everybody's in Ergo because of the first principles, just out of that space. We have to go into a space where people might not really care about first principles or even know what they are. They might not want to really dig into the way blockchain works, the way Ergo works, and why Ergo. You just can't force people to do that. But how do you get those people to adopt Ergo and blockchain and tech in general, and mainly Ergo? You create a viable business solution that is intended for mass adoption. It's intended for an audience that doesn't need to care about what's under the hood. And so that is where Palmyra and that is where ZenGate came from. That's where Palmyra came from. So, and I am slowly but surely heading towards what you were asking me. So why this, right? Why not something else? The answer is actually not that difficult. This is something that's familiar to me. From my work in Cardano, I have dealt with nation states. I've dealt with supply chains. I've dealt with digitization. I've dealt with leapfrogging, developing economies through technology, through blockchain technology. The work we did in Africa and Ethiopia and other countries in Africa with Cardano. The work I did in Georgia with Cardano. I know how to do that kind of stuff. I know how to deal with industries and governments on that level. And so why reinvent the wheel? I know how to do this with the right tooling and the right environment. It's a very impactful piece of business development. So why not? So that's why we did it. We started working with commodities because I have experience. I have experience with Georgian wine, for example. I have experience with other commodities. I worked with, we and at IO worked with Ethiopia and the coffee trade. We have worked with Mongolian cashmere trade. So yeah, it's just something that is familiar to me, that I know how it works. That's why we dug into it. Another reason is because so there is a lot of, well, first of all, there's a lot of need and desire in these underserved commodities for what we have to bring, right? Because they already know how it works in other spaces. Like, for example, the tea industry is not as developed as, say, the coffee industry. The coffee industry as a commodity, as a commodity ecosystem is more developed. They actually have coffee indexes. They have coffee futures, even though that industry still has gaps. With the use of the technology that we're building, we can fill those gaps. And that's really what the issue is mainly, is even though there's been a lot of digitization, a lot of information sharing, a lot of this tooling that has been built up for the commodity trading industry and supply chains, there's still a lot of gaps. And these gaps are not on the macro. They're a lot of times on the micro. They're commodity specific a lot of times. And so what you have to do is you have to create a solution that pays attention to the nuances of the specific commodities. It doesn't just try to kind of, scoop the entire pot together and try to slap an across the board cookie cutter solution to everybody. And again, this is what Palmyra is about. What we do is we take each individual commodity that we onboard into Palmyra, we deep dive into the industry. We deep dive, like for example, right now we're deep diving into the sail-on tea industry. We're learning as much as we can from the factory owners, from the farmers, from the traders, from the buyers and the sellers, from the regulators, and so that we have a good understanding of the industry, so that when we digitize these processes and when we incorporate these processes into Palmyra, these processes are, number one, going to solve problems that they have right now. It's not something that, oh, this would be nice. It's like, no. This is a problem. Like lack of communication within our ecosystem, which is something actually that happens quite a bit with the tea industry and the sail-on tea industry is, even though Sri Lanka is it's pretty advanced as far as smart device penetration, payment systems, all these different things, right? There are still really obvious gaps in communication that happen, and especially in the sail-on tea industry. There is not enough systemization that is, again, on the macro level, right? So factories don't communicate with each other as much as they should. Data doesn't get shared or is not available as frequently and as on demand and as accurately as it should be. Like, for example, crop data, traceability, transparency is just not there, even though it is desired. They're not trying to hide anything. They want transparency. They understand the importance of it, but the infrastructure is not there just yet to provide that service to the end consumer. And Palmyra does that. Palmyra fixes that. So that's why that field is it's familiar. We understand from my experience and from our experience, Sam as well, we understand what these industries lack. And we believe that what we're doing will provide and is providing a plethora of value to this. It's literally, if you think about it, a lot of innovation, I'm talking about long-term sustainable innovation, is common sense. It doesn't come from somebody just like coming up with something so revolutionary. I mean, once in a while it does, but a lot of times it's not something where somebody comes up with this and everybody's mind is blown and they've never seen anything like this before and it changes everybody's life and overnight. It does happen once in a while, but most innovation happens as an aggregate solution from things that by themselves might not worked or worked as well, and then you create this well-balanced concert, and you put it into an aggregate solution, and then you bring it to the world, you bring it to the end user, and they say, oh, wow, okay, now it makes sense. The iPhone is a very good example, and it's an example that I brought up several times. If you think about it, the iPhone is, when it came out, right, people were really like, wow, this is cool. This is really easy to use. This is just, I won this. I like this. Was it something that was completely revolutionary? Well, no, we had touchpads before that. I had a Palm Pilot with an attachment you could use that you could use it as a cell phone. I had that before this smartphone craze came about. But what Steve Jobs did is him and the team, they put it together in such a viable package that the end consumer said, wow, okay, I know that all these things existed by themselves, but in this combination, it just makes sense to me. And, if you look on your desk or in your pocket or whatever, you got a smartphone. It might not be an iPhone, but it's a smartphone, right? Did we have this technology 20 years ago? Yeah, we did. Separately, right? Did we have digital cameras? Yes, we did. Did we have touch screens? Yes, we did. Did we have mobile apps? Yes, we did. Was it put together in such a package? No, it was not. Did it make sense in this kind of aggregate package? No, it did not, until somebody said, here, use it like this. And that's exactly what Palmyra does. We're not reinventing the wheel in a lot of ways. We're basically taking solutions that already exist. There is some innovation, but a lot of these solutions, like traceability, for example, like instant payments, transparency, all these different things, they already existed. These concepts are not new, but the way we put this together, the package that it comes in, that's the special sauce. That is what makes Palmyra unique. That's where the innovation is coming from.
Right. Yeah, that's a lot to unpack. I understand, obviously, coming from the Ergo side of things. I mean, you're absolutely right. We can live in our echo chambers and know that we have all the tools, but until we actually put them into effect, the end result is a lot of potential and not a whole lot of manifestation of that. And I remember you, maybe a year ago, alluding to that you were going to take on kind of a new project to bring a commercial suite of solutions to Ergo, which, it was a tall order, right? But for those people watching, I think it's really important to know, like you said, there are blockchain-based solutions. They may not always be distributed. They may be closed-circuit systems between trade organizations, and they, within their island of information, may be able to see everything and conduct trade with each other in a more efficient manner, but in a closed-off way. The idea of bringing a decentralized distributed ledger that obviously is not only immutable, but shares a lot of the first principles of Bitcoin, but improves upon them, allows people to have the integrity and to know that this is a kind of universally distributed. And when you add in the nodes, when you add in kind of on-chain compression through storage rent and extended UTXO boxes that consume themselves, and you can consolidate them, it makes it more viable for a long-term commercial product like Palmyra, or what the other solutions of ZenGate will offer long-term, to actually be sustainable. So, when we think about kind of the hot topics that are in today's media about electric vehicles, one thing I thought of, precious metals, right? Nobody really wants to know or really does know where these are coming from, unless they really look under the rug and know where 70% of all this precious metaling for EVs is coming from the Congo and things like that. And counterfeiting of luxury goods, which maybe most Americans might not look at as a big deal, but in Asia and in Europe and a lot of these other markets, having an authentic handbag by a luxury handbag maker is really important. It's a multi-billion-dollar industry that's losing money due to counterfeiting. And like you said, the technology is there. And commodities. We were talking with Sam in part one that commodities, that global market is set to hit $6 trillion by 2026. So it's really underserved. It's not as sexy as stock trading and doing options on Apple and things like that, but it's really the intrinsic value of all the things we consume day in and day out that actually matter. So with that being said, why Sri Lanka? You touched on briefly Sri Lanka. I spoke to Sam about Sri Lanka. Why was that such an important place to start for your pilot program with Palmyra?
So again, the question, the answer here is pretty easy. We were looking for jurisdictions. We're looking for underserved commodities that would fit our business model to onboard first, and we actually were thinking about Georgian wine or spirits, because that's where I have my connections, in Eastern Europe. Maybe potentially coffee, maybe even potentially Mongolian cashmere, again, from my connections. And all of these are very viable fields, and we are, most likely going to onboard those as well. Why Sri Lanka? Because 2 of our key members are Sri Lankan. They suggested, they said, well, hey, Dan, why don't you look at Sri Lankan Ceylon tea? And it fits so well into what you're trying to do. And yeah, I did. Looked into it, and it was kind of the perfect storm of it being really where we want our first pilot commodity to be. There are problems that we can solve with the platform directly, as in we don't have to sell this. We'll say the platform will do this, and the guys over there say, oh, that would be amazing. It's not something that you really have to sell. You just have to do it. Our 2 members, actually, if you wanna check, well, it's Kaz and then Cal. Cal is our director of business development, and there's actually a series that we did with different members of ZenGate, with Nico Despopoulos, with Colum Sheehan, and so I would suggest you check out the interview with Colum to really see where it's coming from and where this inspiration for Sri Lankan Ceylon tea was born. And yeah, it just made sense. We had the right connections there. We had the right entry into the market. We could capture the market at least from the middle out. We didn't have to go door to door. We could capture, we could go to all the factories. We had access to all the factories. We had access to regulatory bodies, right? We could set up meetings. We could get these guys to have real conversations. It just made sense. That's why Sri Lanka. It just made sense.
What were some of the features that Palmyra can offer as solutions that when you went over there and you were having these discussions that they were chomping at the bits to have? What were the bottlenecks that are like, if you could remedy this, this would be amazing, please do?
Well, so of course they want more buyers. I mean, that's what it's about.
Right.
It's a trading platform, right? So they want to be able to sell more. They want to be able to, bring up their margin and to increase the volume, and also to provide a better price for their buyers, because right now there's a lot of different bottlenecks that have to do with logistics, that have to do with finances, that have to do with just traceability, information sharing, that is really makes the process slower and more expensive. And so the price of Ceylon tea is Ceylon tea is some of the most expensive tea out there. And while it is a top shelf product, it could be cheaper. And the reason why it's not is not because there's some kind of price gouging or anything like that. It's just simply because what's in place right now, the logistics, the environment in which they sell this tea and they export this tea is somewhat resource intensive and money intensive, and it's just not doable to bring down the price to where it's more competitive. With Palmyra, we can solve a lot of these logistics issues. We can solve a lot of these regulatory issues simply by digitization. And this is something that is appealing to both the tea industry and the regulators, because as far as the regulator is concerned, you're not really cutting up their cash flow, right? They can still charge for the credential that they issue, but they issue this credential digitally. So there's less overhead for them. And so it's just digital credentials, to be able to say communicate with the tea board in a much more expedient fashion, not having to spend all this time going back and forth between, say, the tea plantation and Colombo, which in some cases is a 4, 5, 6 hour ride one way by car. And if by digitizing these processes for compliance and regulation that accompanies the tea industry, or that is interwoven into the tea industry, we create a more efficient supply and value chain for these guys, right? And therefore they can make more money but while charging less, which means making the product more available. so aside from that, access to capital and financing. This is going to be a combination of CeFi and DeFi that we're going to put into Palmyra. One of the things that I'm actually looking to do is integrate with other DeFi platforms to bring liquidity into Palmyra and provide some of the forward contracts that are going to be available on Palmyra for T, which is collateralized because there's actual product behind it, right? And it's verifiable that the product is there. To bring these kind of DeFi opportunities to the DeFi space right now, because I mean, if you think about it, the DeFi space right now, most of it is just sloshing liquidity from one DeFi protocol to another. I don't want to discount what the DeFi space is doing right now. There's a lot of innovation there, but I mean, think about it. How much new money is coming into the space? There isn't. It's like, okay, so I'm going to, put the tokens up into this DeFi platform, get yield. They're gonna pay out on this other token. I'm gonna sell this token. I'm gonna provide liquidity to this DeFi platform, but cash out this token and buy this other coin. That's what it is. With the help of blockchain tech, we can plug into the DeFi platforms and give them opportunities for micro lending and for DeFi that they haven't had before. And again, in turn, giving more opportunity to the small business owners, the factory owners, the farmers, who will also be able to get paid faster. So that's another, instant payments, access to capital. That's another point that they're really into. Like, yeah, this is definitely awesome for us. Another exciting part, another exciting field that everybody was really into was just data availability, crop reporting. There's just not enough real-time crop reporting going on, which is really needed. And this is something Palmyra can provide as a product of built-in traceability. So while traceability is already built into the product, we're going to be able to gather that information and create a value-add service out of that is really needed by the industry. Another big thing that they were excited about is having a way to create, kind of dial in your logistics solutions. Logistics is, as I mentioned before, a big bottleneck. There's a lot of waste that happens right now. There's also there are limitations that are set by price because different amounts of tea require different logistics solutions. You're not going to send 1,000 kilos of tea by DHL. You're not going to pay $1 to ship a kilo of tea that costs $1. It's not viable. What we do is we will provide a communication medium between the factories where they can potentially crowdsource a container, which is not available right now. They don't have this communication medium right now. So that's something that is really valuable to them because they can reduce their shipping costs. They can reduce the logistics costs, right? If, say, an average container is about 8,000 to 12,000 kilos, right? You got 1,000 kilos of tea that you want to send out, but maybe somebody else out of the 500 factories out there has another 500 to 1,000 kilos, and everybody, all the stuff is going to, say, Russia, because Russia is one of the biggest importers of Sri Lankan tea, of Ceylon tea, and you source this container, put it all together in the container, and all these different factories can now reduce their price for themselves, their overhead for themselves, and get logistics done a lot easier and a lot cheaper. So that's it in a nutshell. There's they were excited about a lot, but those are the main points that I think they were most excited about.
Right. I want to touch on a few things that you mentioned in there, going back a bit. With the DeFi protocols, you don't have to pull any punches when it comes to the fact that the majority of the crypto industry and the retail investors are looking to make a quick buck. Everybody is aware of that to some degree. Because easy come, easy go, right? You see all this money come in when Bitcoin cuts in half every election year in the US, 2020, 2024, and everybody speculates on where the price go up, price go down. And
Right.
and the intrinsic value of having this technology is not to speculate on the price going up or down. It is actually in the utility at the end of the day of implementing this technology in everyday society and kind of doing boots on the ground, if you can, missionary style, like a religious missionary style, but for financial empowerment.
Right.
And
that's the one.
And it's interesting. I want to ask you after I get to this point, about the Cardanian influence on you, especially since obviously this echoes a lot of what Charles has been saying for years now. I think about his old TED Talk. It's old now. It wasn't old when I saw it, but 2014 or something like that, where he's like, we should get the developing countries on board with financial inclusion. We have the technology. And it was, it wasn't really understood back then, and still isn't today.
Yes,
because
it's not really.
Yeah.
I mean, only a select few actually understand what that really means. And again, it's not about, hey, look how cool blockchain is. It's not about that. It's about, look how easy it is for you to actually do the same thing that you were doing before or not able to do before. It's easy.
Right.
Right. It's accessible to you now. And that's exactly the thinking behind this. This is why we specialize in developing economies, because developing economies are the ones that are more open to leapfrogging and to basically kind of not waiting to catch up the legacy way to everybody else, which they never will. That's all about money.
Right. It seems almost counterintuitive not to tap into those developing economies, because when we think of developing, we think of this really poor image of a country, civil war, people throwing rocks at tanks or something like that. But the reality is much different in a lot of these places. They have multi-billion-dollar markets, and meanwhile, everybody's doing a line to get their money out of Silicon Valley Bank or something like that. Everybody just wants to cater to a VC that will give them the capital for them to run on jet fuel until they're in a glide mode, autopilot. I hope they don't crash into a mountainside or something. It's really strange. It's really strange that we're not doing more for that, because there's a lot of money involved in tapping into. You're not doing a charity case. It's a business model. And
absolutely. I mean, look. The thing about it is, people don't understand that there is a fine middle between empowering people and still being able to have a sustainable business within that jurisdiction, right? If you have a sustainable business, you're not taking advantage of anybody. You can do ethical business there and still make money and still bring value to the ecosystem, right? I mean, that's really what it's about, right? It's not about charity. They don't need our charity. They need, look, Sri Lanka, the repeating conversation that we have in Sri Lanka is, we want dollars. We want dollars in. We want to bring dollars into the country. We want to be able to pay in dollars. They don't want us to give them like a gift of dollars. They want to do business. They just want to be able to do it in that particular medium. And I am a big believer in just good old capitalism. I was, I mean, look, I know that some people might get triggered by that, right? But fuck that. Okay. I grew up in a communism, and it wasn't even a communism. It was like an oligarchy, communist-like oligarchy called the Soviet Union, right? And we were told how evil capitalism was, and how evil capitalists are, and how evil the U.S. is, and how evil the West is, and all this bullshit. And in the end, it actually turned out to be the opposite. These guys, the Soviets, the high-ranking Politburo members, the generals, they were they were everything that was projected as evil about capitalism. They were doing that because it was unethical capitalism, right? So as long as you keep your ethics, and it's not even capitalism, it's more like profiteering, it's and there is a difference. But if you are truly a capitalist and ethical, and you keep your business ethics with you, it's a way to empower people. It empowered me. It empowered us. It empowered the immigrants from the Soviet Union, because we came to a country which allowed us to do that. Which gave us the opportunity to make it. And yeah, we didn't have any handouts. We went back when we immigrated to the U.S. We got a little bit of assistance, but not much. We all had to get jobs. We had to go get jobs. We had to do what everybody else does, right? We were on welfare just for a little bit, but we got off, right? We graduated. And the way we graduated was because of this understanding of how to kind of harness the opportunity, right? If the opportunity is given to you, and that really comes a lot of times in these developing economies, because if you give them this opportunity that they just don't have right now, if you give them access to this opportunity, they will jump on it, they will harness it. And I believe capitalism brings that to them. Like I said, if you do your business in an ethical way and you provide these opportunities to them to leapfrog by doing business, by being entrepreneurs, by being proactive and having a level playing field when they're being proactive, or at least semi-level playing field when being proactive, that will empower them. That will help everybody across the board. And this is why the first principles, if you want to call them that, of Palmyra are so solidly grounded in this idea of opportunity inclusion. Because really, if you think about it, again, taking away all of this political and left versus right BS that the term capitalism has been, that has been attached to that. If you just think about it, just from a conceptual standpoint, right, and from an ethical standpoint, right, you can be an ethical capitalist. And what is capitalism but a way to create opportunity inclusion? You don't get handouts, but you can do this, right? You can provide. You can provide for your livelihood like that. And so, yeah, and that is what, going back to what you were saying about developing countries and not giving them handouts and just giving them the opportunity to do what they want to do. That is what it's about.
Yeah, technology definitely has turned out to be a playmaker to level the field. We can go back to the communism stuff too, but I don't want to get too far off track. But it's amazing how widespread lies can only last so long. They eventually dismantle themselves. You can't keep up the act forever, and the walls fall. And again, technology. If you look at the cost of smartphones and how they keep going down and they keep getting better, to the point where you may have a check cashing store in the US, but yeah, everybody in that line waiting to get a check because they weren't deemed credit worthy enough to go to open a bank account, or they happened to lose the bank account because they were deemed high risk, yet they have a smartphone in the pocket. So it seems almost nonsensical that we're not doing this more, trying to create solutions from the ground up, because the top down is so saturated with boom and busts, and they're not really, it's like a leaky bucket of, hopefully this will improve somebody's life, but it sounds like a great idea, so let's throw money at it and hope you solve a problem, versus let's see you solve a problem, then throw money at you. or simultaneously.
Yeah, exactly. That's exactly it. I mean, another issue that I see in the blockchain space is, and this is not anything new, and it's not just unique to the blockchain space, but a lot of times you have a raise, and then everybody is making some good money, and then you start making a product, and it's like, well, yeah, not really how it should work. You should have a sustainable race to create a minimum viable product that will then create a revenue stream that will prove concept, which then you can say, okay, we see that it works, right? So now what do you need to scale? Not have this humongous $10 million, $20 million, $30 million raise, and then, okay, guys, now let's get to work. It's like, no, you should have already been working. You should have been working already. Like, right now is not this time to start working. Now is the time to scale up. You can't scale up from zero. Well, I mean, you can, but that's not really scaling. They're just starting, right? And that's exactly why we do what we do with ZenGate. I mentioned this a couple of times on social media that, we do have investors, right? We have some angel investors, some really good friends of mine and of ours, of myself and Sam. And that initial investment helped us a lot to get things off the ground, to get the company set up, to get all the admin of the company set up, to get contracts out, to even build out some of the things, like the UI, for example. But it's not we didn't get a huge amount of money up front. So what we're doing is we are building regardless. Right? We are positioning ourselves so that we can keep building regardless. We're not like reliant on, okay, so we need this much money to even do anything.
Right.
We're already doing it, right? Yeah, I mean, I'm spending my own money right now on some of these things, and it sucks to do that in the bear market. You take out $10,000, it's like taking out $100,000. And it hurts every single time. But in the end, you say, well, I mean, that if I'm putting it into my business, that's a 1,000x right there. So you just need to keep doing what you're doing, right? You need to understand that it has to be a progressing line of development and of improvement, and it cannot be contingent on, okay, if only we raise this money, then we can do stuff. Just do stuff. Just do it. There's always stuff to do. You can always do stuff to further your project, regardless of how much money you have raised. And this is the type of mentality that needs to get back into the blockchain space, as well as just startups in general. Just because somebody else raised $20 million and you didn't, doesn't mean that you can't be as successful as them or better. And in fact, raising $20 million doesn't make you successful. It actually puts more pressure, at least for me. If we raise $20 million for ZenGate, that puts pressure on us that says, okay, we now owe to the investors in an amount of $20 million. And while that's perfectly fine, it's not like winning the lottery. Like some of these guys, like, oh my God, they raised 20 million. Oh, it's like they hit the lottery. It's like, well, no, it's not your money. It's the investor's money. You won nothing. You won a job. That's what you won. You do what, you do your own, like, you made a job for yourself. You don't have to work for anybody right now. You work for yourself, and now that's what you won. Besides that, there's a shitload of responsibility that comes with that. And you have to really understand that, and you really have to kind of move forward with that understanding, and to get your priorities in line to truly make sure that your business succeeds and blossoms.
Yeah, I agree with everything you said. One of the reasons I find ZenGate, particularly myself, very enthralling is because it is tied to the real economy of the world, not this chronic need to reinvest money in order to get more money in order to reinvest in something else in hopes of a return, some sort of yield. And that's kind of what, at least in the US, what we've become. The majority of our GDP and stuff is just moving numbers around. It's financial instruments and services and servicing debt. And it's we need a tethering back to the real economy. What are we actually doing? The negotiations with the earth and the producers of commodities, and how are we going to bring those across the channels internationally, instead of just having regional isolation and trade organizations for North America and Mexico, and then only in ASEAN, Southeast Asia. And by the way, most people aren't aware of this. Malaysia, Indonesia, all these countries that we seem as kind of obscure in the modern day they're not just for expats. These are the places, Southeast Asia and Africa are the places that are actually going to experience the largest population booms in the 21st century. So these are your customers. This is the youth. You yourself are right now living in a country that has gotten so modern and industrialized that the population is aging at an extraordinary rate, and the U.S. is happening. We're experiencing the similar sensation. So when you're looking to scale a business, it's better to look below, because soon the people below you may be above you. I mean, these are all the young people that are going to have these smartphones and be more risk averse when it comes to or tolerant of risk when it comes to adopting new technologies. They're more open to change. You're not going to get that from that one guy, all these old investor types of Warren Buffett's and stuff. I think Bitcoin is all a scam and all that. You got to look at the actual user adoption, and not just to lay it in your pocket with more bills. So I wanted to ask you, what does the consumer at the end of the supply chain get out of all of this innovation and furthering of kind of supply chain and efficiency? How will their shopping experience at the end of the day be enhanced, and their overall involvement in the full supply chain broadened?
Well, it's all about access, right? So it's going to be access to information, it's going to be access to better product, there's going to be access to lower prices as well, because this has the potential to reduce all these prices, and while creating a better product. So you get better products for less money. What does the end user get? Yeah, they get that better product. They get to pay less money. On top of that, they get to know where their product came from. It's not a mystery anymore. You get to see the factory, the field that it was harvested from. You don't have to worry if this is something that you do worry about, that your proxy financing a conflict, or you're actually using a product that is not done by sustainable means. And what I mean is that not just sustainable like an environmental sense, but sustainable as in so did this product say take advantage of somebody to be made, right? Was there unethical, like some sort of unethical practice going on to attain this product? Was the farmer treated fairly? Were they, or are these guys basically like the pawns, and then this one entity right here is the one that basically gets all the money in, and then the rest of the people are basically borderline slaves, which happens quite a bit, and a lot of these in some of these emerging economies and commodity fields, you'll have a monopoly at one point or another in the value chain and in the supply chain, and that monopoly is going to basically vampire out most of the value from what is being made, and then somebody else that's actually putting in the work is going to get pennies on the dollar just because they have they have no choice. For example, this is it was much more than it is now a common issue in developing economies in Africa, in the coffee trade. There would be just these disparities in who does how much work and who gets what kind of money for their work, right? So, for example, like the farmer would actually get a fraction of what the real value of their product is. And the ones that actually would make the most value would be the aggregators, the companies or the factories that would buy out all these other from the coffee farms. But because they were the only ones that you could sell to, because they monopolized that part of the supply chain, they had no choice. They named their price, and if you don't want to sell it for that price, well, then keep it. It's, what are you going to do? You're going to buy a plane ticket and bring a bag of coffee over to Starbucks in Seattle? It's so. I mean, it's things like that are important to know, that today's consumers find more and more important to know. Sustainable processes, fair business practices, the purity of the product, right? How has it been processed? How has it been handled? How has it been treated? It's a combination of things. It's about incentives, right? This process will also provide incentives for people. Like, for example, traceability is something that the buyer from the Palmyra platform can utilize for their customers and create a point program through that, right? And they can use that data for marketing, right? So that's something from the small business side that is very valuable. This new tool for marketing, for showing how good of a product you have just by utilizing the platform. That's a big value. So it's a combination. It's a combination of things, and in the end, like I said, you get a better, cheaper, more sustained, and more fairly attained product. And I think that's where the market is going right now. People don't want to be responsible for, like I said, for taking advantage of the little guy, and for paying for some regional conflict, or for buying blood diamonds or all this shit. They just want to know that what they have there is a worthy product.
Right. I would agree with you. I think it's very apparent that consumers themselves kind of feel a bit guilty, but don't really know what to do with it when they hear about these stories about, they watch a YouTube video on how the cacao farmers in the Ivory Coast have never tasted chocolate, and they're barely getting anything for it, and then they have like a village, and they're like, it is how I support my 7 kids on the farm. And you're like, oh boy, I'm eating potato chips on the couch in Chicago. What am I going to do about it? And I think it's really important to give people that option with Palmyra and these types of services, because it basically allows you to vote with your dollar. I think of single origin coffee, for example, kind of growing in popularity. As a coffee grower myself, in a place that traditionally doesn't grow any coffee in Florida, it's a lot of labor. And we don't often associate the intrinsic value of having these things that we consume every day. It keeps us alert. We joke about, oh, don't talk to me before I had my coffee. And we're not able to really empower the people that have provided these goods. They negotiated with the earth. They're the genesis of this transaction and producing our consumption. I mean, when you tie value to ethics, and the consumer is also willing to pay more money for something, and you're actually saying it will cost them most likely less just because of getting out of all of these bottlenecks, will save the producer, will save the brokers in the supply chain money along the way. it's a win-win for everybody as far as I'm concerned. And a perfect example for people in the US, if you look at like Trader Joe's, which has very low prices compared to a lot of the bigger chains, but yet they offer better quality product. And they're able to have a smaller footprint in terms of retail space. And they put in seasonal items that are trendy. And if they don't work, they could take them out. The reason for that people don't understand, they're like, why is this so good and so cheap? Is because Trader Joe's, for example, is able to negotiate, or Aldi's, the parent company, is able to negotiate directly with the source of these products, of these goods. And they can deal with those manufacturers of those Belgian butter cookies you love so much and not have to work through all the bottlenecks of middlemen that also need a cut. And then that ends up being passed on to the consumer. So it is really possible. It's not just all, wishful thinking. We've seen it in the marketplace. And I think this is really significant on more than one level, obviously. So talk to me about Cardano. We've talked a lot about Ergo. Are there still plans to utilize Cardano as a blockchain layer for Palmyra and the other services that we'll get into to wrap up this conversation?
Absolutely. It's like I said, it's going to be a combination of a payment platform. Is going to be we're most likely going to run some traceability components on Cardano as well. I would like to utilize the Cardano DeFi space and to really kind of interact with the Cardano DeFi space to create what like I said, to create this bridge to new micro lending and financing and yield opportunities. And really look, if the technology is there, the demand is there. And I'll tell you, for example, right now, and I'm not going to get into the specifics of how the system works, but in general, the way it works right now is the factory owners, they pay the farmer in advance, right? Because up until really recently, you actually wouldn't have forward contracts on green leaf tea in Sri Lanka. Now they changed it, and actually now we literally on the last day of our trip to Sri Lanka, the ministry notified us that they have passed the law of permitting forward contracts for tea, which is actually amazing because we can put that right into Palmyra and then take it right into the DeFi space, and now you have forward contracts, real forward contracts to provide liquidity for. But the core issue is right now they have very limited access to funding. Mainly, it either comes from the brokers who provide funding to the farmers, or provide funding to the factories, who then pay the farmers. So to get back to what I was saying, so the farmers before, what they would have to do is they'd have to give, or the factory owners, they would have to give the farmer in advance because they couldn't buy raw green leaf tea from them. They had to give them in advance and estimate what that green leaf would be when it is processed, right? How much tea they would actually make. And they would give them about 80% of the value based on previous auction prices. And then the rest of the 20% would be given to them once that was sold at the auction. And now the issue here is that it's not money that you just have on under a pillow somewhere. They have to borrow this money, and they borrow it either from the bank or they borrow it from the brokers, who also borrow it from the bank, right? The interest rate in let's play a game. What do you think the interest rate for borrowing money on that scale is in Sri Lanka right now? I'll give you three options: 5%, 10%, 30%.
I would go with the highest because you decided to make a multiple choice.
It is. So the base rate is around 30%, and with the markup that you have to pay to the broker, which adds another maybe 1 or 2% on top, which is fair. I mean, that's they're letting you borrow money. some of these factory owners, they have to pay 30% per annum on this money that they're borrowing. 30%. Like, think about it. People cry about, oh my God, my mortgage, the mortgage rates went up 2%. 30%. You pay 30%. Like, isn't it like, I think it's what it used to be in the US that it's illegal to charge more than something like 20% or something like that, right? On a personal loan. It was something like that. 30%.
Well, yeah, investing into a property is like 20% down. Yeah.
Yeah, so 30%. You have to pay 30%. Just if we create a tool that will offer that contract to the DeFi space, and the DeFi space, you even tell and again, this is just, I'm pulling this right out of the top of my head. We haven't really come up with the numbers, but even if you say you get, and these are short-term loans, right? These are not like a year, 2-year long loans. They're seasonal loans, right? So they harvest, a couple of months later they sell, they get money, right? Or a month later they sell, they get money. So they're short-term micro loans. Even if you get a 10% yield on something like this, right? I think the DeFi space is going to be happy to get 5-10% yield, right, on a low risk investment.
Well, yeah.
And if you for the factory owners, that would be like tremendous. Wow. That now they're paying 10% instead of 30%, right? And again, this is just we haven't settled on the numbers yet, but are definitely going to be lower than what they're paying right now. And access to cheaper money means they're going to want to get cheaper money. So yeah, it's a problem that, again, that the platform solved just because we have access, and we have access to Cardano. We have access to Ergo as well. As more and more DeFi platforms grow on Ergo, I'd love to also work with Chris Ray's platform as well for micro lending. Other ones that are going to be built in Ergo, and like I said, all of these things we could utilize Rose and Bridge for bridging these assets, moving them across chains. And just the bottom line is more opportunity for the DeFi space to invest, and the more opportunity for the factory owners and the people in the sale on T space and other commodities as well to attain cheaper capital. And that is something that we can attain through the Cardano ecosystem. And this is value that we can bring to the Cardano ecosystem, right? It's not just another DeFi platform. It's going to be a real fi platform.
Right. So I want to go back to what I said. It's 20% to invest in a secondary property. That's what I was referring to before. People say, well, I didn't pay 20% for my primary home. I'm not talking about your primary home. I'm talking about secondary home, additional investment in your portfolio is 20%. Okay. Now with that out of the way, that was in the back of my head. I didn't clarify. So essentially what you're saying is like to actually help a business owner in the real economy, you can crowdfund the financial backing for that factory owner or that small farmer that needs to upgrade their machinery in order to be able to have a higher crop yield for next year. And then after the forward contract is complete, go back into there and then obviously pay back the loan with the smaller interest bearing amount, and everybody wins versus parking. I don't know. I don't want to name any DeFi lending platforms that have, collapsed in the last year or so. But that is truly remarkable, because when you really think about it, there's all this internet money flowing around, billions and billions. Sometimes it hits a market cap of 1 or 2 trillion quite easily. And people kind of nihilistically are just looking for the next pump and dump token, because that's what is expected of them in this space. They don't really have a real way to use their coins. And this would be enforcing them as the bank. Essentially, they are the decentralized bank. And
Isn't that what really this thing is about that we're doing? I mean, really, isn't that what it's about? I mean, that's what it's about. Yeah, I don't want to be the bank. I don't want to deal with the bank, right? So you're, for lack of a better word, the bank, but you're you got the power now, and that's what the blockchain movement is about. And then it's about time we start really, adhering to, because you got all these people, you got all these talking heads and all these anons, postings on social media or whatever about first principles and about how crypto is going to solve this, crypto is going to solve that, and then they turn around and they pump and dump, or they buy an asset that is completely useless and is just basically it's money to make more money, then which then they cash out into fiat.
Right.
And
right.
And that's the thing, it's a lot of this is really in a way ironic, and people say, well, why doesn't Bitcoin decouple from the legacy financial systems, because it's supposed to be a hedge. Well, yeah, but you're not treating it like a hedge, though. You're treating it like a slot machine for making more fiat. I mean, do you cash out? And of course, some of it is infrastructure issue related. Say you can't really buy a car with Bitcoin just yet. Well, you could, but not everywhere, right? You can't go and pay with Ergo and buy a cup of coffee just yet. And even if you could, would you? Because the asset is so volatile compared to a medium that like a financial instrument that's more stable. Say what you will about fiat, but it is hell more stable than, like, as far as volatility goes, than crypto. And this is essentially why people will cash out and they'll pay with fiat instead of crypto, is because, well, yeah, but crypto, I mean, fiat doesn't really fluctuate 10%, 20% on a daily basis. Some crypto does. And that's
we're treating it as a more volatile alternative stock market. And
exactly,
it's about time. It's like 15 years, 14. It's enough.
Exactly. It's really, I believe in these core concepts, right? But I'm also a realist, and I understand that you can't just magically wave a wand and everybody's going to say, oh, wait a second, crypto is much better than fiat. Let's just all abandon fiat and do crypto stuff. Not going to happen. You need to think about it. The internet was invented in what is it, 1968, something like that. The government internet, the TCP/IP protocol, was invented in the late 60s, right? Something like 68, I think, something like that. When did the internet become more or less mass adopted? 2000. Yep. 30 years, over 30 years right there. Why? Because it took it that long to evolve to where it was viable enough for the average person to use while still maintaining the core of what it's about, which is basically, virtually unlimited access to information, fast, easy access to information for an acceptable fee. Right. Basically, that's what the internet is in a nutshell.
Right.
Yeah. So it's about time. It's about time we start thinking about this field that we're in that fashion. And if we just do that, this is what because there are these conversations right now about, why isn't Ergo listed on this tier 1 exchange, that tier 1 exchange? And I understand that, right? We're working on it, right? But I mean, look, the bottom line is, and again, I hate to break hearts, right? But centralized exchanges don't give a crap about first principles. They don't give a crap about fair launches. They don't give a crap about open source. They don't care. They do not care. What they care about is money and volume. That's it. Money, volume, done. Doesn't matter if the thing is a centralized piece of crap written by Hitler. If you get money and volume, they'll list it. So are we going to abandon our first principles? Are we going to abandon what we've built just to be listed in the tier one on a Binance or a Kraken or whatever else that we want to be listed on? No, I refuse to do. I would refuse to do that, and I would do everything in my power to suffocate an inkling of that kind of thinking in the community, right? But we have to create volume somehow, right? And how does volume what is another way to create volume? By usage, right? You use the blockchain ecosystem, right? You drive volume through it by mass adoption, right? The volume of the Visa payment rails is not created through investors in Visa stock. It's created by people utilizing the network and the different financial institutions and players that are attached to it, right? It's not created because Visa is listed on the New York Stock Exchange. That's why, so much money's flowing through it. Not really. That was after the fact. The fact is that it's being utilized. The network's being utilized for something that is a real world use case. And this is what Palmyra is about, is going to bring that real world usage to Ergo, is going to bring that volume. And I will encourage, and we will encourage other projects to do the same. You create something that will bring that volume, that they will see that this currency is being used, that this ecosystem is being utilized. And then these guys are going to come knocking on our door. Because not even Ethereum, not even Bitcoin has those kinds of use cases. They don't. There isn't, real demand, real world demand just doesn't exist just yet. Wide range, global demand for Bitcoin. It's there, but it's not, to us, it's obvious. But to the average person, it's not. And how do you do it? Do you just keep beating them over the head with decentralized, crypto is better, fiat sucks? Not going to really work. What do? You bring them a economically viable solution that will make their life better, that will gain mass adoption because it is better, because the tech really is better. And you provide that to them, that will bring liquidity into the ecosystem. And then, but at that point, you know what? I don't really think is going to, first of all, these guys, they'll come knocking on our door. And in the end, we're not really going to give a crap about them anymore, because we got real world adoption. The liquidity, the volume is coming from the real world. It's not coming from some exchange where somebody's trading Ergo for Bitcoin for ADA for whatever else, right? So we just need to really start thinking about it like that. And that's where, and that's what should drive the community. And I hope that's what this will show the community, that the success of ZenGate, the success of Palmyra will show, and the mistakes that we make will show the community and the entrepreneurs in the community how to create these economically viable products that really do bring the volume and the liquidity and the usage and just, what we call in Japanese the chikara,
Hajime mashite to you as well.
Well, we already met, so hajime mashite. Yeah, but it's for all intents and purposes, hajime mashite.
Yeah, don't be so focused on the IPO, guys. Don't worry about it. Focus on keeping a little private company and, the stock market equivalent, clamoring for the IPO. When are we going to be on the stock market? And I agree with you. Don't focus so much on, I understand liquidity access and things like that. But if you do have a way to obtain it, basically what you're saying, I own ERG, I own ADA. I remember a time when ADA wasn't on Coinbase, right? It wasn't on all these places. And, it's just saying, hey, I don't care about the Shelly era. I don't care about the Goguin. I need my ADA bags to go up. And that's really indirectly what you're saying when you only focus on that. only, singularly.
Yeah.
So I agree. We agree on a lot of things. I don't really have a counter to that. So I want to conclude the conversation because we've spoken a lot about Palmyra, but ZenGate is much more than Palmyra. It's just the first of many solutions that you plan to offer in the future. You have Solaris and Cyberiad. Solaris is a software as a service designed for micro, small, and medium-sized businesses to create their own no-code blockchain-based solutions. For example, individual product creators and businesses making customers through Solaris can tokenize, futurize, and list unique pieces on a global marketplace whilst embedding traceability in the creation process. And Cyberiad, which is really out there, welcome to cyberpunk, but it makes perfect sense once you understand Palmyra and its use. Cyberiad is an anchored region and or country-specific metaverse that will allow for governments as well as the private sector to roll out various services from land deeds, location-specific services, as well as products that are coupled with real-world goods, products, and locations. It enables those services to be accessible under a unified layer with the ability to easily scale and embed new sector agnostic products and services as consumer and user appetite grows. That was a mouthful, obviously. Why have this trifecta of flagship products that you plan to implement? Because Palmyra seems like, that could keep you busy for a lifetime and then some. Now you want to, go the full 9 yards, implement something that can aid and empower that first product with Solaris. And then also when we're talking about geo restrictions and communication, not only with the supply chains, but actually how do we get everybody in the same room virtually within the same areas? So why do those other two things as well?
Well, it's all about the macro ecosystem that we're looking to build and that we are building. Palmyra is, it can keep you busy for a lifetime, and it'll probably, it will keep us busy. But Amazon. Amazon in '99 is just the online book seller. They sell books. I want to get a book. Oh yeah, Amazon. Yeah, I'll go to Amazon to get a book. Amazon 2023. AWS, spaceships, online shopping for everything. God knows what else, right? It's not a book company anymore, right? It's a whole ecosystem. Did Bezos have that particular vision when he just started Amazon? Probably. He found a place to start and then he expanded. Some of it, yes, maybe some of it just came, as he went along and kind of built this thing. But it's really about creating this, it's micro versus macro ecosystem. And so, just like what Charles says about Ergo as being the spiritual successor to Bitcoin, Solaris and Cyberiad are spiritual successors to Palmyra, because through the use of something like Solaris, businesses that source products on Palmyra can then utilize those products and continue that value chain and continue that, what I was talking about, say the traceability aspect of it, right? The tokenization part of it, right? All these different tools, they can continue on to their individual businesses. And at that point, it goes B2C. You create these solutions that are bespoke to their particular business, that is meant for the individual customer, that they can then, for example, they source precious stones through Palmyra and then use those stones to create unique pieces of jewelry because they have a jewelry store. They utilize Solaris to plug into the ecosystem and to continue this chain of traceability and tokenization. You transfer all of this into your particular medium, and you create things on top of it. So then you evolve the NFT that is assigned to that particular lot of stones into a unique NFT for that particular piece of jewelry that you created. On top of that, you can create your own instant payment systems. You create your own incentive systems, blockchain based. You can create your own traceability, continued traceability chain. You can put that into your own business and say, okay, so in my own business, I would like them to see where it's made. Who the craftsmen are, where it's being shipped from and to, because it's not just going to be one store type of mom and pop shops. It might be somebody's got 2, 3, 4 stores, and they have a warehouse, and they want to show people, okay, so I got these stones from Thailand, right? Or actually from Sri Lanka, right? I got these stones from Sri Lanka because Sri Lanka has actually got a pretty big gemstone trading market, which actually goes, a lot of stones that are sourced in Sri Lanka go to Thailand, and Thailand actually makes jewelry out of these stones. You could show that process. Then it goes for not just where the slot came from, but what happened to the slot afterwards, right? Who created your piece of jewelry? Why is it unique? That adds value to the piece, right? And that's just jewelry. You can do this with everything. You can do this with blended teas and coffees. After you buy raw tea from Sri Lanka, and you create your own blend, and then you can say, this particular blend utilizes these ingredients, and it continues the life cycle. It just makes sense. It makes sense because Solaris is B2C. It's bespoke solutions that are made by plug and play components that do not require code, right? So you can plug and play traceability without really writing code. You just think about the logic of it, the business logic of it. You create a payment system, an instant payment system within your business. Again, but business logic. You create an NFT that is going to be unique to your particular product. Again, no code. You just use the business logic. You say what you want it to do. And that just makes sense. It makes sense for the end business, the B2C2C side, where the customer of Palmyra is now the business that will create value for their own customer. And then Cyberiad, Cyberiad again just makes sense. You utilize the metaverse to really to digitize your physical environment, right? Somebody, for example, that is sourcing certification from the T-board, just a small example, from the T-board to export tea. What all they do is they go through the metaverse. The T-board can verify that they actually are in that particular location, and they can transfer the certificate directly based on their geographical location through the metaverse, because the metaverse is going to have an immutable way to verify that particular location is in fact it does in fact have the certificates and the credentials needed for the export, right? Things like land deeds that we're talking about, right? You can create the process of transferring land deeds a lot easier if it is geopositioned, right? Because you can physically verify that this particular land deed is assigned to that particular piece of land, because you can verify that the piece of land through the metaverse is in fact available there. And in fact, you can go down to the piece of land, and then you can verify it through an AR. That it exists. I mean, for lack of a better word, think about Pokemon Go, but with real world stuff. And I know that that's kind of a lame example, but I mean, really, if you think about it, you're not going to collect Pokemons. You're actually going to utilize this for transferring land deeds instantly, and to verifying land deeds with with the registrar's office without having to make 50,000 trips and having to trust the other party. It's going to be trustless solutions, create opportunities for escrow that is going to be based on an immutable ledger that will that will trustlessly prove that this particular land belongs to this land deed and vice versa. And it just all makes sense. It just all makes sense within the macro ecosystem concept of ZenGate and what we're building.
Perfect. I don't want to ask you about timelines for those other products because I know right now you guys are full steam ahead with Palmyra. Want to focus a bit more to conclude. What is the near future goals you have for Palmyra with the rest of the team at ZenGate? Do you have any other pilot programs in other emerging markets that you have your eyes on? What are you guys working on next?
So in the next several months, MVP. Our MVP is going to be buy, sell, trace, pay. That's the MVP. When that is rolled out, we can add other components to it. Onboarding factories, onboarding buyers, and onboarding sellers, getting volume, getting business done. Start to get business done through the platform. We're not screwing around, right? We're building a viable product that needs to generate income and it needs to generate traffic and volume. And I mean, that's what it's about in the short term as well. And in the next 3 to 4 months, that is what we're doing. MVP in the next 3 to 4 months, onboarding the factories soon after that, probably within the next 6 months, 6 to 8 months. Well, basically by the end of the year, we should have the factories onboarded and some of the buyers onboarded as well, and really start transacting through the platform. Within that time as well, within the next half a year, I would also like to create the DeFi side of Palmyra and bridge the do the DeFi platform bridge and provide access to these forward contracts to DeFi users, and in turn provide access to the capital by the factories. I think it's very important. It will also empower the farmer, because really the farmer is the one that needs the most help, I think. And we're doing everything we can to really focus on bringing them as much opportunity and inclusion as possible. And that will really mean more, like I said, more access to faster turnover, faster capital, instant payments. That's what it looks like for us in the next several months. It's going to be really busy. We're going to continue doing our raise. We're also looking to get the community involved in that as well and provide some early opportunities for the community. And we'll have more information about that later. And yeah, just building TM.
Sounds pretty straightforward. Well, without further ado, I want to thank you for your time. It's almost midnight where I'm at, and I know on the flat Earth that we live on the other side of the flat Earth, for you, it's approaching. No, it's already past noon. So
yeah, almost 1 p.m.
You're in the future. Dan, I am from in Japan. You're in Friday.
It's a rainy, crappy future, but it should be better tomorrow.
Okay. So again, I want to thank you for your time. Really, it was a pleasure meeting Sam, especially somebody new, a fresh face on the channel. But of course, it's been a while since we did our first episode. And that had over 1,000 views at the time. So, I tried to imagine we have a big university classroom, and we have 1,000 students or 1,000 audience members, and we're on stage. So, it's always a pleasure to kind of touch base with you and see what you're working on. A year ago, you were just talking about, hey, I have this big announcement. It's going to bring a lot of commercial adoption for Ergo. Can't speak about it yet. And look at all the amazing things ZenGate has already accomplished. I mean, you guys are everywhere. Boots on the ground, going to conferences, meeting with people, decision makers, which is probably the most important thing, and really trying to dig in deep and get this off of the assembly line as quickly as possible. So it shows. I think everybody in the Ergo community is very proud and also happy that you chose to help to bring this onto this blockchain in particular, because you can easily, just stuck with Cardano and not included us at all at the end of the day. So, you put your work ethic where your beliefs are. So it shows. So we all thank you, I'm sure.
Yeah, it's a pleasure. It's really about not just sitting there and being a talking head on YouTube, telling people about no offense. I mean, you and I right now are talking heads, but anyway,
the next 100x, one of those videos with the clickbait and
really.
The Federal Reserve you won't believe it. Bitcoin's going to 100K next? Question mark. I agree.
Yeah, I was always about not just talking, but doing. And I kept talking about commercial adoption for Ergo. And it was just a matter of time before I was going to kind of say, okay, I'm not just going to talk about it. I'm going to do it. I'm going to do it. I'm not going to wait for somebody else to do it. I know we have capable people in the ecosystem. I'm going to do it. Then I think that once people see that it really is a commercially viable ecosystem, they will start creating their own solutions. And on the other side, people start utilizing Ergo because they'll see that that it is just as viable as any other blockchain ecosystem. And that's really what it's about. It's not about going out there and again, I don't want to break any hearts. And I truly believe in first principles of Ergo. I truly believe in our amazing ecosystem and an amazing tooling. But to the average person, they just don't care. What they care about is what they have in their hands, makes their life easier, and it works. And if you bring that to them, you can then you're in charge. You can say, and this is powered by Ergo. And they're going to say, cool, okay, nice. They're going to say, oh no, wait, Ergo, no. I want it to be Solana. The chances are pretty good they're just not going to know or care enough about something like that. And so, while it's not as sexy as we might hope to be recognized for what Ergo is, for what we recognize Ergo as. If we want mass adoption, that's what we have to do. We just have to be secure and knowing that we did build an amazing ecosystem, that Ergo is an amazing product. And we don't need any validation from anybody else because we know, and that is why we're using it to actually build something that it goes outside of our sphere and into the real world, and it's something that the real world will look at as a needed and pivotal part of their lives.
Well said. So I wish you all the best of luck with that endeavor with Palmyra. I know it will be very successful. It's very much needed. And it's definitely an attention grabber. Once you start digging into the website and following the updates, you're like, it's hard to look away. It really is. So thank you again, Dan, for taking the time. I know you're very busy. So thank you.
Anthony, and it's a pleasure to be back. And hopefully within the next few months, we can talk about how awesome the MVP is and how much adoption we've gotten so far, and how it's been exponentially bigger than what we originally thought.
Looking forward to it. I have no doubt it'll get to those heights. But the amount of traveling you guys are doing, you got to get some flight miles for sure.
Oh yeah. No, we got the flight miles. I also got flight miles on my legs being all swollen after a 14-hour ride in coach.
Yeah, you're a very tall guy. Most people don't know that. You're really tall. So airplanes aren't designed for you.
No,
Not
no, no, no,
anymore.
no. No, not really. Not really.
All right. Okay. Thank you guys for watching. I'll see you in the next one. Thank you.